Hey everybody. Hey Alan. Good morning. Good morning. How's it going? My goodness, banks setting a new record yesterday. And you thought it was all clear, right? That news is, money's pouring back into banks. We're seeing money flow back in. Everything's cool. Everything's great. All of a sudden, maybe not so much. What am I talking about? Look at this right here. Fed emergency bank bailout facility usage tops $100 billion for the first time yesterday as money market inflows soared again. The emergency bank bailout facility hit a record level yesterday. Morning, Jason. Morning, Arthur. That doesn't sound like the banking thing's all clear. I mean, if you've been listening to me for a few weeks now, I've been saying we do not have the all clear yet. There's going to be more problems in the banking. Right here, it's a blinking red light. Caution, caution. This thing's going to come apart. We have more problems on the horizon. So the last 15 weeks since SVB, Silicon Valley Bank, has seen over $635 billion of inflows into money market funds, by far the fastest inflows outside of COVID's we've ever seen. Institutional funds saw $24 billion of inflows, while retail saw $12.5 billion. All right, they're talking about that's just a week. So we have a little bit of a Fed issue here. Like the numbers the Fed's putting out versus what's going on in the actual market here. Commercial bank liabilities, we've got a discrepancy here. Usually these two fly in parallel. At this point, they've gone whoop, totally opposite. Right here. Show the chart. So right here, we've gone totally opposite. See how that coming apart there? Not so bueno. Not so bueno. Could be. I mean, crash may be a light term for what we saw before compared to the apocalypse that may unfold here. Arthur, I don't foresee this ending well. All right. Back here is where we had the problem. Excuse me. A little gravel in my throat this morning. Back here's where we had the problem, right? We were in line with the money market funds and commercial bank liabilities. Now, we've decoupled. This thing has gone. There's a liquidity problem in banking. And one little hiccup, a rate raise, another rate raise. The Treasury's already, the plan for the T-bills is already kicking off. Like that should be kicking off. I think it's this week. That's going to suck liquidity out of the banking. I don't see how this doesn't grow exponentially into a bigger problem. All right. Be careful. Now, the Fed's balance sheet has expanded by $3.4 billion last week. Biggest expansion since the SVB bailout. Also, as far as QT is concerned, the Fed has sold a modest $2.4 billion into its lowest since August of 21. Coming back down. And the central bank had $103 billion of loans outstanding to financial institutions through its two backstop lending facilities, up $5.742 billion from last week. We thought banks were all clear, right? This is growing. We were up here, but we're growing right now. Another problem is potentially in the works here. And then the Fed's emergency bank term funding program surging over $100 billion in the last several sessions here. Hey, Mad. Happy Friday. It's Friday. So anyway, just be careful. Be careful. All right. The banking thing, definitely not all clear. Now, the funny thing about TLT is it has quite the bullish setup. So we can flush out some banks. Let's go look at some charts. Let's look at what happened last time. So before I talk about actual trades, though, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, and fun, and is not a recommendation to buy or sell any financial instrument. If you desire that personal financial advice, hire and consult a financial advisor with a fiduciary duty to take care of you. So we want to look at TLT. Let's zoom out and see how this behaved before. Last banking crisis was back here. And look what happened. And then it came right back. As things came apart, it went exponential. As exponential things go, we come right back down. So there's the potential for TLT to do something exponential. We could go whoop, right back up near the top. Could even make a higher high. Probably not. Probably just come retest the roadmap line on the weekly. We've been below the roadmap line for a while. We haven't retested since back here in January of 22. Come up here and retest. That's the highly most likely scenario. And then we'll see what happens. So on the daily, we're just kind of stuck, bouncing off the bottom, bouncing off the bottom, bouncing off the bottom. Can we break out and go up to the target finally? Time's going to tell here. Right now, just hasn't happened. So it's been uninteresting. Like, it has a beautiful potential setup and just been uninteresting. Just sideways churn. So TLT doesn't have to respond. None of these things are, unless you have something like Bitcoin, US dollar, where they're a pair, then there's no correlation really. I mean, unless it's like, it has to be something that's tied together. Otherwise, correlations in the market, TLT usually goes up when the stock market goes down. Well, that didn't happen this time. I mean, it topped out right back here in 2020. When the market apocalypse, then we dipped, and then we came back up, and then it's been nothing but down since then. All right. Just be careful. Just be careful. Morning, Philip. Morning, Mary. Morning, Jason. If you want to chat with me and everybody else, all you have to do is click the subscribe button, and a few seconds later, you'll be able to chat while we're live. Now, if you're tuning into this later, after I'm not live anymore, you have to leave a comment. I will get back to you as soon as I can. Or in the description, we have a link to get into Discord, and you can come talk to us in Discord. I'm there pretty much all the time. Do sleep a little bit every day, but I'm there. Especially if you ask for my opinion on something and tag me, I'll usually chime in and give you my opinion. But maybe it's not the opinion you want unless you frame your question properly. It's like, what's your opinion on Pepsi? Well, it depends on the time frame. On the 1 second chart yesterday, it was a hot mess. On the daily, it was bouncing off the roadmap line. So, see, bouncing off the roadmap line potential. If it gets back up here, we could go higher. But pre-market today, not really a big mover. So it's not on the morning monster list. S&P. As I keep beating the drum, we are coming up here. We are consolidating right at the top. Inching higher, inching higher. I was seeing headlines yesterday that we're breaking out to a new bull market. God's sakes, be careful, people. Please be careful. This is a ripe environment for ripping everybody with a giant pullback that could be multi-hundred point. We bottomed out back here in March on the 13th, and we've just been grinding higher. No significant pullbacks. You could be like, well, that was a pretty significant pullback. Not really when you look at where we came from and some of these moves. We've just been grinding. This is a grind higher. The VIX just hit lows we haven't seen in years. Rewind all the way back over here, pre-COVID. That's where VIX is right now. Does that seem like the kind of, like, does this seem right? I mean, does it make sense? I think VIX is going to pop in the next, maybe not today, maybe not tomorrow. I'll be surprised if it doesn't pop next week. Why? Why next week? Are you new here? Let's talk about it a second. This is one of my favorite calendars for economic news because it just lists it all right down by the day. It's forexfactory.com. You just click on the calendar button right up here in the middle. Right here next week. Let's look at this. Coming off Monday, fairly benign. Tuesday, CPI. Wednesday, PPI. Also on Wednesday, FOMC meeting. Rate change announcement. Jerome Powell's press conference. All right. Thursday, core retail sales. Empire State Manufacturing. Retail sales. Unemployment claims. Philly Fed manufacturing. Industrial production. And then on Friday, consumer sentiment. We have a ton of news next week. Please be careful. These are all, any one of these hitting in a week is a volatility-inducing potential event. But we have like a stack of these. Monday's the only, I don't know if you call it a safe day, but Monday's the only day where we don't have potentially market-shaking news. Like, we could come in hot on CPI. The Fed could then the next day turn around and raise rates. Please be careful. Please, please be careful. And the news, I think it was yesterday, Europe officially in a recession. I think it's just a matter of time before they say, oh, the U.S. was in a recession too, and you know what? Biden saved the day. Everything's cool. So, yeah. Plus, the futures contract rollover, that's already in the process, and we have a giant OPEX for options, where the weekly, the monthly, the quarterly, first half of 2023, all expiring right there next week, along with the futures. Giant OPEX. Probably going to be in, I'll be surprised if it's not near $2 trillion worth of options expiring next week. So, volatility inducing. Usually, all the cover call strategies and everything roll by Wednesday. That's why we usually see some selling and volatility heading into the Wednesday of normal monthly OPEX. That's why volatility usually picks up. We see liquidation and then rolling forward causes volatility. Be careful. This stuff is coming next week. All right? Be careful. All right. Yeah, so Goose says TLT stands out as the change in value from the 2018 build-up to the COVID and then the big drop even then. So, yeah, be careful on all these things. Things that have happened in the past won't necessarily happen again in the future. Like, we have kind of a changing environment a little bit. Everything's got rotation. So, just be careful, please. And then we look at this right here, Fed likely, DGS2. This is the 2-year Treasury constant maturity rate right here. If you haven't heard me talk about this before, let's zoom out and talk about a little bit of history. So, in the past, starting back at the dot-com bubble, every time we kind of get this flip where the orange line, which is the Fed funds rate, pops through above the 2-year Treasury constant maturity rate, the blue line, the DGS2. This is on a weekly chart here. Every time that Fed funds rate pops through and holds, we usually see a 3 to 5 month sideways on the Fed funds rate, and then 2-year Treasury starts dropping, and the Fed usually has to chase it down. And then we find a bottom, and then we start chasing it back up, and then we find a top. We go, another financial freakout. That one started around 2006 and actually culminated in 2007 and into 8. We hit the bottom into 9, stayed at the bottom a record long time, started climbing again, chasing the rate. Then we got a mini freakout in 2018 into 2019. If everybody remembers, maybe you don't. That was kind of a little market freakout. Then we cut rates aggressively again, right back to the bottom, stayed at the lows into COVID, and then kept them low, and then we're on this most aggressive rate raise that we've ever seen in history here. And you know what? The 2-year Treasury isn't just plummeting off. It's actually climbing. So back in January, I kind of drew these 2 lines here, a blue line going sideways and then popping. Like, this is not what anybody's talking about. The fact that we may hover sideways for a little bit and then the rates start climbing again. Now, I didn't try to draw them out anything except where you could see it. But we may see a period where we kind of go sideways a little bit, and then, holy cow, we've got to raise rates again. That's not what everybody's playing. I mean, that is certainly not the narrative in the mainstream media. It's all about cutting rates. All about cutting rates. So be careful. This thing climbing higher can create more stress on the banks as we move forward. The banking problem may not happen now. It may happen out here. It could be in 24, could be in 25. There's going to be increased stress until we break. And when we break, we're going to be coming all the way back down. And it could be from much higher levels. Please be careful. All right. Rates probably going to keep climbing. That's this scenario that I kind of put on here back in January kind of seems to be what might actually happen. So, all right. We talked about VIX. We talked about S&P. S5FI. Let's talk about this. This is the stocks above the 50-day moving average on the S&P 500. Still hanging out right in the middle. We're indecisive. Hanging out in the middle is indecisive, but we did come down here near the bottom. Typically, that means we'll come up here near the top before the next rotation. So we may see grinding higher continue. Although we topped out back here in April and back here, topped out right back here in April. We did run to the bottom in March. Usually that sees us rally right back up to the top, but we didn't. We came up short and just been kind of grinding. So despite grinding higher, we did push down here, and then we've popped a little bit right here. So what does this tell me? It's just telling me it's kind of a coin flip. Like, we don't have there's no energy built up for a big move either direction right now. I look at this kind of energy. When we're hanging out at the bottom, there's energy to go higher. When we're hanging out at the top, there's energy to go lower. Right now, hanging out in the middle is kind of a coin flip situation. So as we look at NASDAQ, 65% of stocks above their 50-day moving average, and we're just kind of, again, hanging out in the upper middle range here. You can see right back here into March, April, we kind of got a little heated up there near 75, and then we came down and visited around 41. Then we've just kind of been churning in the middle, churning. So as this approaches the upper bounds here, we typically don't spend very much time above 80% of stocks above their 50-day moving average, or we don't spend much time below 20. And that's the same on NASDAQ, and it's the same on the S&P. It's one reason I just keep these charts just to check in with them. It's not really like a watch it all the time thing, just to check in on the pulse of the market. So circling on back to the S&P, we're seeing the contract rollover for ES, creating a little gap and a pop there. Don't freak out. This is just the contract rollover, and this will come back down in line with the other contract. ES, was it M2023? Right there. See, we didn't actually pop on the June contract, but this June contract does expire next week. So well, it looks like the market just opened. Just bear in mind. All right, we're grinding right up into the highs that we saw back in August. Getting a little pop on the constant contract just due to the fact that we're rolling over. It makes this is the one time where it's kind of unreliable to chart the constant contract. When we get the contract rollover, we get a pop. And then Russell, despite the contract rollover, nothing. Finding resistance at that 618 level. CL, the news yesterday, U.S. trying to play let's make a deal with Iran. Hey, if you guys don't refine nuclear material, we'll let you sell more oil. And that looked like a pullback on oil. So, oh, look at that. Boot getting the potential entry. Beth, if you're around or anybody else chasing Boot, that may be a potential entry. It's one to look at. I'm going to set another alert right up here. As long as we don't just drop back down. That's a potential entry on Boot. Gold also looking just consolidating. Probably wants to do that final reach down there. Bitcoin working its darndest. It's probably going to go on a run this weekend when the market's not paying attention. That's a beautiful measured bounce type setup on the smaller time frame. I talked about it before. We kind of failed the breakout right there. Got a retrace, holding a higher low. Can we get it this time? We need to be above this high right here to really signal that we're going to get the continuation. So we've got these high, there is a significant bunch of highs built up. This was a lower high than we had back here. We need to break some higher highs. And Ethereum, same kind of micro situation a little bit, not quite the same. Bullish pattern, but needs to break above the highs of the consolidation. Jumping into the dollar, just continuing to churn. We kind of pushed back down below the roadmap line a little bit, finding a little bit of support in that orange box again. This could break on down. We could see this break on down. Be careful if you're chasing dollar. Tesla, nice pop on the GM deal. You might be like, what GM deal? Well, GM agreed to license Tesla's technology, and starting in 2024, you'll be able to charge your Hummers and Silverados and whatever else with Tesla chargers, and that means money for Tesla. So coming right up in the vicinity of that downtrend line. Be careful. We're going to see a pullback. I drew this arrow on the chart months ago. Right there, right up there, right up. We're there. The pullback is the next likely thing to happen. Then we load up. We can load up for the breakout. That breakout can take us right up into the $300 area. Retest the August highs. NIO, just still looking like a garbage chart. Probably going to keep working its ways towards zero. Netflix, getting a little bit of pullback there. Still on the path to 500. That's still my primary expectation. We'll probably see a volatile move, one of these bigger moves. We haven't had one of those in a little bit. I mean, that was 1, 2, 3. Probably need a pullback in maybe the high 300s to get some energy to go even higher. Doge showing up on stock twits this morning. Not, despite whatever they're talking about, not really moving. So not getting my attention. MDGS popping above the roadmap line, not really going anywhere. This is a medical specialty. Caution. GM, of course, announcing their deal with Tesla yesterday after the market closed. Beautiful for GM, but their chart is just a sideways piece of garbage. So we can get continuation back up to the tops, but there's resistance right up there. Got to break above it to get any kind of continuation move. Carvana, announcing that financial conditions are improving, but they lose a ton of money. Be careful. This is not the environment where you want to lose a ton of money, but hey, we may see Carvana rally. There seems to be another shortage cooking on used vehicles. Supports higher prices. That's the improved environment for Carvana. CRSP, just continuing to churn in this area. Nothing great. Biotech, you know, dangerous. Biotech is dangerous. XRP, we are seeing this thing continue to try to break out. This one can break out and run. My targets are up here in the 70-cent area on XRP on the next move. Right up in this zone. Auto zone. Profit zone. All right, we break above that prior high there. Probably headed on up in this zone right there. ADBE. Right into the resistance. Breaking above that high. We do have resistance. We could see a pullback. A little bit of churn, a little bit of trouble. We get above this $475 area. That kind of clears the air that we can go on back up. SMCI, super micro, getting a little volatility there as we continue to climb higher. This is looking exponential. At some point, it's going to come back down. It can go higher, certainly, but at some point, it's going to come back and likely retest at least that kind of level right in there. Please, please, please be careful. Chasing exponential stuff. We can still go higher. Can still make, this could be the one that they're like, holy cow, this one went up to 9,000%. It just makes it highly likely that we see it come right back down though. NVIDIA, churning up here. Be careful. A pullback seems very likely at the elevated price to sales levels. Go watch the video yesterday if you're not sure what I'm talking about. Airbnb, just, that's a hot mess of sideways right there. That's a hot mess. Lots of levels, lots of churning, lots of nasty, gnarly, hot mess of levels. I'm just going to remove all this stuff at this point because I don't know that it matters. Except for that resistance zone. We got to get above that to go any higher. Breakout over 130 could set us up for 155, 170, but right now I'm just not interested in it. You know, this could be a measured bounce setup, but it doesn't prove it to me until we're above this prior high right here. Which one? Not quite sure. I see you right there where the big blue arrow is, right there. We get above that, odds are looking better for going higher. Below that, probably just more consolidation, churn in this nasty, gnarly, gappy situation. Etsy, nice pop, but still way below the roadmap line and still looking very bearish and could go on down to 45. You're like, wait, that's half of where we are now. Yeah, that's half of where we are now. It could be a 50% loss. Be careful. We don't have to go higher. At some point, we're probably going to pop up and test the roadmap line. I don't know if that's now or later. Now we can push. We can continue to push on lower. That's a good spot to hold, but if we poke back below it, watch out below. DOCU. Wow. Nice pop, but retraced right back to the roadmap line. If it can find support there, break back above this high it made this morning, game on. But right now, it just filled the gap. Classic. Filled the gap and found resistance. It's essentially what I expect Netflix to do. Fill that gap. You might be like, well, how's that a gap? It's from right back over here. Made a giant gap. Fill that gap and probably get a pullback. BIDU continues to churn sideways in this zone between support and resistance. Target looks pretty bad for Target. I hate to say it, but and next support down is back here, and then COVID lows down here when we all thought we were gonna die and never go shopping at Target again. Don't look so good. And then charge point, of course, probably probably getting reacted to negatively due to Tesla's deal with GM, and it's like, where are we going to get customers? Yeah. All right. It's kind of what's moving today. Bias for the day, still churning higher. S&P going to retest those levels from August highs. That's the name of the game here. We got the alert right up here at 43.24. See if we can get it. It's not much higher now. We could spike up a little bit higher, but at some point this is likely to retrace. Lots of volatility inducing events next week. Please be prepared. Don't get caught with all your money invested in the stock market. Please be careful. All right. Likely to see an outsized retrace. Thanks for coming, everybody. Like I said, if you want to keep talking to me all day, link is in the description for Discord. It's market roadmap. All you gotta do is be a client. Like $5 for 3 months, and then like $20 for another 12 months. It's like $24 for 15 months, and you get a weekly watch list and video updates and get into Discord. It's pretty good deal, I think. I mean, it's ridiculously low priced. And then if you don't want to do all that, just hit subscribe, hit the bell with the notifications, and we'll see you again on Monday. I'll go live again. Thanks for coming, everybody. We'll see you again soon. Bye, John. Bye, Arthur. Bye, Valerie. Bye, Al. Bye, Patrick. Have a great day, everybody. The account you save may be your own.